Hello and welcome to the Texology. I am Priyanshu Goyal and this audio episode is part of my podcast series The Texology, which aims at imparting information on crucial concepts of the Indian taxation scenario. If you prefer to listen in Hindi, you can watch my videos on YouTube and Instagram. You can find my profile by the name CA Priyanshu Goyal. As with other episodes in this series, this is going to be a very short clip to convey only relevant matters. Before we begin with today's content, I would just like to mention that if you feel like connecting with me, I am available on Instagram, LinkedIn, and Twitter by the name CA Priyanshu Goyal. In this episode, we will discuss the implications of TDS in case of sale of immovable property like houses, offices, etc. by the non-residents. Deduction of TDS in case of sale of property by non-residents has always been a hardship for such non-resident sellers because of high rate of TDS as compared to the TDS rates in case of sale being made by the residents. In case the resident is selling the immovable property, tax is deducted at the rate of 1% on such sale consideration. Whereas in case non-resident is selling the property, the rate of TDS varies depending upon whether the seller will be incurring the LTCG, that is long-term capital gain, or STCG, that is short-term capital gains. For example, if the non-resident has been holding the property for more than 24 months, then it will be a case of long-term capital gain, and accordingly rate of TDS will be 20% plus 4% cess, so total of 20.8% in case of sale consideration being less than 50 lakhs. Whereas if sale consideration is between 50 lakhs to 1 crore, then TDS rate turns out to be 22.88%, which is a total of 20% LTCG tax plus 10% surcharge plus 4% cess. So, rate of TDS in case of immovable property by non-resident varies but is always higher than 20% on sale consideration as per normal provisions. And this causes hardship because actual amount of capital gains earned by non-resident is comparatively much lower after deducting the purchase value of property. So there are certain ways in which this rate of TDS on payment to non-residents can be lowered. First one can be taking the benefits of DTAA provisions. As per Section 90 of the Income Tax Act 1961, the tax rates on taxable income of non-resident will be either the rate as prescribed under the Income Tax Act 1961 or the rates as mentioned in the DTAA of India with non-resident persons country, whichever is beneficial. Or in other words, if the rates in DTAA are less than 20% or applicable TDS rate as may be the case, then tax will be deducted at the rates mentioned in DTAA. So checking upon DTAA can be beneficial. Second is application for deduction of tax at lower rates under Section 197. The recipient of the consideration or the seller can apply for deduction of tax at lower rates under Section 197 of the Income Tax Act. This application is made in Form 13. Application for deduction of tax on lower amounts under Section 195(2) can be the third option. The payer of the consideration or the buyer of the property may make an application to assessing officer to determine that what proportion of consideration would be liable to TDS. This application is made in Form 15E. So that's all for this clip. I hope you'll find this useful, and if there is any related query or question about this, feel free to reach out to me on info@priyanshugoyal.com.